As of this moment on Thursday, April 23, 2026, Rezolve AI, trading under the ticker RZLV on the Nasdaq, is priced at $2.74 per share. We are seeing a steady intraday climb of 4.18% from the previous close, with the stock oscillating between a session low of $2.65 and a high of $2.89. While the broader tech indices are showing some caution, Rezolve seems to be finding its footing after a volatile morning. Most investors looking at this stock see a small-cap player trying to make noise in a crowded field, but what they might be missing is the sheer velocity of the revenue ramp happening behind the scenes. The expectation is that this is just another niche AI firm burning through cash, but the reality is that Rezolve recently turned the corner into its first month of profitability. That is a massive distinction in a sector where most companies are still years away from seeing black on a ledger. While many traders are focused on the heavyweights like NVIDIA stock or Apple stock for their AI exposure, Rezolve AI represents a different kind of opportunity. The common belief is that the big gains in AI have already been made by the hardware providers, but the next phase of growth is likely to come from the application layer. This is where companies actually use that computing power to change how we spend our cash. If you look at the activity on platforms like the Fidelity mobile app or Interactive Brokers, there is a clear trend of retail interest moving toward these specialized AI software plays. People are searching for the next big thing, often using investment help tools or online investing sites to find companies with high upside, and Rezolve keeps popping up on those screens because its numbers are starting to defy the small cap narrative. Right now, the tension in the market regarding Rezolve is palpable. On one hand, you have a year-to-date performance that has frustrated long-term holders. On the other hand, management has just raised their 2026 revenue guidance to a staggering $350 million. To put that in perspective, the market was only expecting about half of that. This disconnect between the stock price and the projected revenue growth is where the opportunity and the risk lies. When a company tells you they are going to grow 10 times over in a year, you either believe them and buy the dip on your Robinhood app, or you stay away because it sounds too good to be true. Institutional activity suggests some big players are starting to lean toward the former. We've seen significant capital injections recently, including a $250 million oversubscribed raise that provides enough runway to execute their plans without needing to dilute shareholders further in the near term. If you look at the trading volume today, it is healthy but not explosive, which suggests that the smart money is accumulating positions quietly rather than chasing a spike. This is the kind of behavior you often see before a major catalyst or a breakout. For those using the SoFi trading platform or managing their own individual brokerage accounts, the key is to look at the annual recurring revenue. Rezolve exited 2025 with an ARR of over $200 million and is targeting $500 million by the end of 2026. If they hit that, the current market cap of around $940 million starts to look very undervalued. It's rare to find a company trading at a low multiple of its future ARR in this sector. Usually, if a company has this kind of growth profile, it's trading at 20 or 30 times sales, not the current levels we're seeing here. Let's talk about what they actually do for a second, because the term agentic commerce is being thrown around a lot. Essentially, they've built a system called the Brain Suite. It isn't just a chatbot. It's an engine that allows consumers to go from seeing a product to buying it in a single conversational flow. Think about how much friction exists in online shopping today. You search on Google, click a link, navigate a website, add to a cart, and finally check out. Rezolve wants to collapse all of that into one step. They're working with massive global brands like Adidas, Burberry, and H&M. When you see names like that on a client list for a company with a sub-billion-dollar market cap, it should make you pay attention. These aren't pilot programs. These are production-grade deployments. For the self-investing crowd, the challenge with Rezolve has always been its history as a newly listed company. It came to market with limited revenue and a small team, but it has scaled to over 1,000 employees and dozens of offices globally in a very short span of time. This rapid expansion is usually a red flag for cash burn, but as mentioned, they hit a profitable month in December. This shows that the business model has inherent operating leverage. Once the platform is built, adding new customers doesn't cost them a linear amount of more work. It's a classic software as a service play, but with a retail tech twist. Comment below how many shares of Rezolve AI you currently hold, or if you're waiting for a specific price target to enter. I'm curious to see how many of you are looking at these smaller AI plays versus sticking with the big names like Tesla stock or NVIDIA stock. Looking at the technical side of the RZLV ticker, the 52-week range is broad, from $1.42 up to $8.45. We are currently sitting much closer to the bottom of that range than the top. This suggests that the market hasn't fully priced in the upgraded 2026 guidance yet. There's a lot of skepticism left over from the SPAC era of investing, where many companies promised big and delivered little. Rezolve is fighting against that general market sentiment. The reality, however, is that their H2 2025 growth was over 500%. That isn't a fluke. That's a sign of a product finally hitting market fit. For those using Schwab Intelligent Portfolios or other
automated tools, these kinds of high-growth, high-volatility stocks often get filtered out, which is why active investors using platforms like Interactive Brokers or Fidelity Brokerage often have an edge in finding them early. The macro environment is also playing a role here. High interest rates have generally punished small-cap stocks because they make it more expensive to fund growth. But if Rezolve is truly self-sustaining and doesn't need to go back to the equity markets for more funding, they become a lot more attractive in a higher-for-longer rate environment. They have already secured the funding they need. This takes the bankruptcy risk off the table, which is the primary fear for most people when they look at stocks trading under $5. When you remove that floor of fear, the stock has more room to react to positive news. One of the biggest potential catalysts for the remainder of 2026 is their partnership with Microsoft and Google. Integrating their AI commerce tools into major cloud ecosystems could provide a massive distribution tailwind. If Rezolve becomes the standard for how retailers handle AI-driven sales, the current valuation will seem like a footnote. However, the risk is always execution. Growing at 10 times in a year is incredibly difficult from an operational standpoint. Any hiccup in their quarterly reports could lead to a sharp sell-off given the high implied volatility of the stock. For those holding RZLV in a Fidelity IRA or a Robinhood account, you have to be prepared for 10% or 20% swings in either direction as the market tries to figure out if this growth is real. Institutional confidence is growing, but it's not universal. We see a split between analysts who see a strong buy and those who are still sitting on the sidelines. This is actually a good sign for a growth stock. You want there to be a wall of worry to climb. If everyone already agreed it was a great buy, the price would already be at $10. The fact that there is still debate means there is still a gap between expectation and reality. The expectation is that small cap AI is a gamble. The reality, based on the recent financial filings, is that this specific company is building a very real, very profitable infrastructure. In summary, Rezolve AI is at a critical juncture. The stock price of $2.74 today reflects a market that is still cautious, perhaps scarred by previous tech bubbles. However, the internal numbers tell a story of explosive growth and a shift toward profitability that is rare for a company of this size. We've looked at the massive revenue upgrades, the blue-chip client list, and the solid cash position that should carry them through their growth phase. The contrast between the struggling share price and the surging operational metrics creates a tension that will eventually have to break. Whether it breaks to the upside depends on their ability to hit that $500 million ARR target by the end of the year. If you are managing your own portfolio through Fidelity Investments or SoFi Invest, Rezolve represents a high-conviction play on the future of how we interact with technology to buy goods. It's moving beyond simple automation and into a space where the AI actually facilitates the entire economy of retail. As we move through the rest of the 2026 fiscal year, watch the quarterly revenue figures closely. If they continue to beat the revised guidance, the expectation of the market will finally have to catch up to the reality of the business. This has been a deep dive into Rezolve AI. Keep an eye on those intraday movements and stay focused on the fundamentals. The noise of the market often hides the signal of a business that is truly scaling. Stay sharp and keep your eyes on the data. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.